There we go. Anything I say and do can be used against me in a court of law now. Just kidding. All right, let's rock and roll. We have some new students in here. We have some people that aren't familiar with PitView. I also have some returning students. If you don't know me, my name is Steve Nuri. Since we do have some new people in here, let me just go ahead and give you a little bit of background on myself. I've been trading for actually more than 17 years now. I started off as a professional trader on the exchange floor of the CBOE, Chicago Board Options Exchange. I started off as an options trader, yes, and then I moved on to becoming an educator in the markets by working with such organizations like the CME, Chicago Mercantile Exchange, and also doing workshops for the CBOE. I also worked for one of the largest options trading desks in the world as a senior options trader, where I dealt with multiple exchanges. But my passion has always been on the education side of things, working for the exchanges. I always feel that I'm a pretty straight up and compliant guy when it comes to trading in the markets. Throughout my background, since I came from the Chicago trading world, whenever you're a trader in Chicago, I always consider Chicago to be the leveraged trading capital of the world. You got Chicago Board of Trade, Chicago Board Options Exchange, Chicago Mercantile Exchange, which now Board of Trade and Mercantile Exchange are the same thing now. But you're always seeking out more and more leverage. And so about 14 years ago or so, I got involved in Forex trading, and it's been my passion ever since. I really think this is a market that really puts people on a level playing field with the big money, that's what PitView is, the big money in the markets. So that's a little background on myself. You'll probably get to know me a little bit. In this PitView Basics series, what we do is generally we go off like a 3-week rotation. What we do is, PitView is not a hard thing to understand at all. It's really not difficult. Even though when you first open it up, it can be a little intimidating because there's all these numbers flashing across your screen. It's actually quite simple the way it works, and I'll be exploring that today. So that's kind of the first week of what we go through in our continuous rotation on the PitView Basics, is going through understanding the bid and ask price. All the numbers that are disseminated through PitView, all the colors, try to give you a solid, deep understanding of what those numbers mean. Because once you know the basics of those numbers, you can pretty much take it from there and understand the majority of all of the indicators that PitView offers. So that's usually our first week, which is today. And then next week, we usually introduce you to the indicators, going through the 3-step process, 3-step method in which you can analyze the market with PitView. And then we always go through a little bit of comparison analysis and actually get into the analysis and actions point in the third week of our basics class. So I hope you enjoy it, because I think this will really give you a good view of what this powerful tool means to you as a trader. So what is PitView? As the name implies, it's basically analyzing market maker sentiment by calculating buy and sell imbalances between the bid and ask price. Now, I can read that all day long off of a PowerPoint slide. However, as an educator and as an instructor and as a trader, dealing with a lot of retail traders, basically the people that want to sit in their house and trade Forex and options and futures or whatever they're trading, the most common question I get from people is, most people know like stochastics and MACDs and moving averages and how to look at price action on a chart. And the common question I get, because most retail traders, they always have that thought in the back of their head, which is true, that the market's controlled by the big money, the market makers, the liquidity providers, if you will, the big banks, the central banks. That's what PitView is. They always ask me, is there a way that I can see what the market makers are doing? Well, let's be honest with each other. The market makers aren't just going to come out and post, hey, by the way, everybody, I'm going to go buy, I'm going to exchange, $1 billion into yen today. They're not just going to announce that. So if you want to know what the market makers are doing, what the big money is doing, you need a way to track that. And that's what PitView does. It allows you to track what the big money is doing in the market through their actions at what we call at the bid and ask price. So it's actually very simple, a very simple concept, yet powerful in the way that it tells you what the actions of liquidity providers and big money are doing. So as far as understanding PitView, the first thing that I usually tell my students when they're brand new to it is you need to understand what it is measuring. And that's what the goal of today's class is just to show you what is PitView actually measuring, what is being calculated or analyzed through the PitView tool. And like I said before, the first thing I generally show my students is, and what I usually have to tell them is, what is shown on PitView is not shown on the charts. That's the first thing that you need to get out of the way with people is, what's being disseminated through the PitView indicator is not shown on the charts. Now, it is a complement to price action as it moves on the charts. It can sometimes be a leading indicator to price action as it moves on the charts, but it's actually measuring something completely different off of the charts that most people don't even think about from a retail perspective, and that is the bid and ask price. See, whenever you pull up a screen, whenever you're going and looking at your trading platform, if you will, most people are very, very much they're focused in on their charts. What they don't understand, if you want to learn what the big money is doing, what the market makers and liquidity providers are doing, you need to divert your attention from the charts to the bid and ask price. Now, I know this is basic for a lot of you, but it's extremely important that I get everybody on the same page. So let's go through the retail understanding of what the bid and ask price is. And if you know me by now, I like using my little pin on here. There we go. So let's go through the retail understanding of the bid and ask price. When you're looking at your Forex trading platform, if you will, you, the retail trader, understand the bid and ask price as this. This is the euro-dollar pair. You know that as a retail trader that you buy at the ask price, correct? Like if I want to buy the euro-dollar pair, which is essentially exchanging dollars into euros and holding on to euros, I buy at that ask price. And if I want to sell to close that position, or if I want to go short on the euro-dollar pair, I sell at the bid price, correct? And that's what the bid and ask price means to a retail trader. I sell at the bid, I buy at the ask. But what you need to be able to understand is, well, who is creating that bid and ask price? Who's giving you the right to sell at this price, and who's giving you the opportunity to buy at this price? Well, that's going to be the market makers, aka the liquidity providers. Market makers are made up of banks, large institutions, central banks. A lot of, in the Forex market, it's not what we call a centralized exchange. It's most of it is done through what we call the interbank market, where various banks and large institutions create the best price in which they're willing to buy and the best price in which they're willing to sell between multiple pairs. So in order to understand what PitView is doing, you need to take the other side of the equation to understand the bid and ask price, to understand the bullishness or bearishness at the bid and ask price. So when we look at the bid price is the highest price a liquidity provider is willing to buy. Now when you're on your brokerage platform, let's say you're with FXCM or FXDD or any number of different FX brokers, when they disseminate the bid price to you, the thing is that a lot of brokers only deal with maybe one or two liquidity providers, and there's literally hundreds upon hundreds of liquidity providers or market makers in the Forex market, but generally speaking, most brokers only use one, maybe two liquidity providers. And they may be the liquidity providers themselves through what we call a dealing desk. However, that's besides the point. Let's just talk about this bid price real quick when you see it on your screen. When you're looking at that bid price on your screen, that is telling you the highest price a liquidity provider is willing to buy. The highest price a liquidity provider is willing to buy from you. Therefore, you sell at the bid, and there's a liquidity provider at that bid price buying from you. Now, when a liquidity provider raises their bid, that's bullish because they are willing to buy at a higher price. So when the bid is raised, when that bid price, let's say in this case, goes from 1.34889 to 1.34899, That means a liquidity provider has raised the price in which they're willing to buy. So that's bullish because they're willing to buy at a higher price. Now, the ask price, which is the price you, the retail trader, understand as being the price in which you buy a currency pair, that's the lowest price a liquidity provider is willing to sell a currency pair. Now, when a liquidity provider lowers their ask price, when the ask price goes down, let's say it goes from 1.34915 to 1.34905, that means they're willing to sell that pair at a lower price, and that's bearish. Just simple supply and demand. When they raise their bid, they're raising the price in which they're willing to buy. That's bullish. When they lower the ask, they're lowering the price in which they're willing to sell, and that's bearish. And that's a very simple concept that you have to be able to understand in order to understand what PitView is actually disseminating to you. Because the activities at that bid and ask price tell you everything, as far as that magical little area between the bid and ask price tells you everything about what the market makers are doing. So, like I said, you have to be able to divert your attention from the charts over to the actual quote screen. So most retail traders aren't going to realize that magical little area between the bid and ask price is where the magic happens in the market. And so what PitView is doing is that little space, that little gap, that little space between the bid and ask price, PitView is tracking the actions of what the liquidity providers are doing at the point of impact, where the rubber meets the road, if you will. And that's what makes it so special, is it's tracking every single movement the market makers are doing when they either raise their bid or lowering their ask price, because that's going to give us, the trader, an idea of what they're actually doing, of what their actual activities are. So that's the first thing that we need to understand. Now, what is a liquidity provider's purpose? Well, that's another thing that we need to be able to talk about, because generally speaking, if there's a liquidity provider in the market, aka a market maker, they're going to make their money off the difference or the spread between the price they're willing to buy and the price they're willing to sell. That's the bid and ask price. If you've ever heard of paying the spread in the Forex market, it generally just means that the liquidity provider has that little transaction space between the bid and ask price where they want to, that's where they make the majority of their money. So in an ideal trading day, if you're a liquidity provider or a market maker, an ideal trading day, your goal would be to transact 50% of your business on the buy and 50% on the sell side. And that would be ideal, because all you're doing is 50-50. You're buying half your positions at the bid, you're selling half your positions at the ask, you're making that little spread, that amount of pips between the bid and ask price, and that would be ideal. That would mean the liquidity provider is flat in the market. Now that's an ideal trading day. However, realistically, we all know that why do directional moves occur? If this were the way market makers did their business each and every day, of just buying at the bid and selling at the ask and making the transaction, they would be very happy because they would have no open market risk. But what causes directional moves to occur? If that were to occur all throughout the day, the market would barely move, right? You know, directional moves occur because of supply exceeding demand or vice versa. And that's what causes imbalance, and that's what causes directional moves to occur in the market. Supply exceeding demand means that there's more sellers than buyers, meaning a currency pair goes down, and when demand exceeds supply, more buyers than sellers, which means the price is going to go up. So generally speaking, with a liquidity provider, if you're able to track their actions of what they're doing at the bid and ask price, you can get a great idea of what is driving the market with that individual liquidity provider. Is demand driving the market, causing the pair to go up, or is more supply driving the market, causing the price to go down? Now, I know that's very basic, but let's take it one step further and actually describe the actions that the market makers are taking at that bid and ask price. So in order to do that, we need to talk about what we call leading versus following. There's two types of actions you can take if you're a liquidity provider in the market, and you can either be a leader or you can be a follower. And most liquidity providers do both. Hundreds, sometimes thousands of thousands upon thousands of times a day. Leading and following is essentially what what are they doing when they raise their bid or lower their ask price? And this is another thing. You'll often look at PitView and you'll see time frames that either say L beside it or they'll say F beside it, and that's telling you the imbalance of what's happening when a market maker is either leading inside the bid and ask or following inside the bid and ask. So as the bid and ask price is changing, if a liquidity provider is the first one to raise their bid or lower their ask, that's called leading inside the bid and the ask price. For example, if we have a bid and ask price and a liquidity provider is sitting at the bid, willing to buy at the bid price, and there's nobody selling to him, what they're going to do is they're going to go ahead and they're going to create a new bid price. They're going to go inside the bid price and create a new bid price. Let's say the market's bidding, let's say the bid and ask is 1.34001 to 1.34004. Well, that liquidity provider is sitting there willing to buy at 1.34001 and he's not getting any people to sell to him, he'll go in and say, you know what, I'm willing to buy at a higher price. So I'm gonna go in, I'm willing to buy now at 1.34002. So what's going to happen is that bid's going to go to 1.34002, and that liquidity provider led inside the bid. He was the first one to create that bid price. He was the first one to go in and say, hey, I'm willing to buy at a higher price, and he creates a new bid price. So that's leading inside, and that's considered to be pretty aggressive because that means market makers, when they have huge amounts of demand, they have to continuously lead inside the bid, create a new bid price if they have to get something bought. Following is a little bit less aggressive, but not to say that it's any less important. As bid and asks fluctuate, as there's new buy prices and new sell prices from liquidity providers, if one liquidity provider leads inside the bid and creates a new bid price to where they're selling at a higher price, following is generally when that new bid is created or new ask price is created. If you're another liquidity provider, another bank, and you see that this liquidity provider A raised their bid price, you have two choices at that point. You can either keep your buy price the same underneath that liquidity provider. You can lead inside and say, hey, I'm willing to buy at a higher price than this other guy. Or you can say, you know what, I at least want to follow him inside that bid. So a following means that when there is a new bid or ask created by a liquidity provider or market maker, that means that another liquidity provider, in order to match, in order to be on the best bid or best ask price, instead of leading inside and creating a new bid and ask price, they're just going to follow that liquidity provider and stand with him at that new bid or new ask price. And that's called following inside the bid and ask. So if you want to put it in simple terms, leading means that the liquidity provider creates a new bid or creates a new ask price. Following means that when another liquidity provider creates a new bid or an ask, in order to be a part of that best bid or ask price, the liquidity provider follows them to that price. Both are considered bullish or bearish because you are willing to either buy at a higher price or sell at a lower price, but leading is considered to be a little bit more aggressive than following. And then what PitView does is it will actually take an algorithmic total of both of those actions being taken at the bid and ask price. It sounds complicated, but it's really not. It's actually very simple. So PitView shows you the details of both of these actions being taken. So when you look at the PitView screen, let's say we look at a PitView screen, you'll see it says, okay, 1 hour L. So what it has all these liquidity providers here on the left-hand side of the screen. And 1 hour L means that for the past hour, it's showing you the actions that the liquidity provider has taken at the bid and ask price. So a 42 means that it's telling you for the last hour, whenever this liquidity provider has either led inside the bid or led inside the ask, he's done it 42% more at the bid price, which is why it's green. PitView is also going to give you now a total of the actions that the market maker has taken when they followed inside the bid or inside the ask price, when they followed another market maker. And then right over here, it'll give you an algorithmic total of both of these columns to show you overall, based on the total amount of actions they've taken when they've led inside the bid or ask and the total amount of actions they've taken when they followed the inside the bid or ask. This will give you an algorithmic total of what their overall sentiment has been, whether as far as buying and selling. Now we'll get into these other columns here in just a little bit. I just wanted to go through that real quick with you. Now, leading versus following, that's just the activity or or gaining an understanding of what, there's really only one or two actions that a liquidity provider can do when they raise their bid or ask. They can either lead inside and create a new bid or ask, or they can follow another liquidity provider to the best bid or ask price. So that simple yet powerful concept is what PitView is tracking. What I try to do for people when they're looking at this type of indicator, or this type of tool as I call it, that's the power of the information being provided. You need to embrace the simplicity and do not overanalyze. Most people have a very contagious disease in the Forex market called analysis paralysis, where they tend to just overanalyze things so much instead of just keeping things rather simple in their head. I was the half in high school that made the top half possible, so I have to always keep things rather simple in my head in order to understand them, which I think is what makes me a good trader. Now, to understand the actual imbalance, when we were on that PitView screen, you saw that there was different numbers inside the boxes. A green 42 or a negative 28. Those are called imbalances, buy and sell imbalances in the market. In order to understand what an imbalance is, or what PitView is showing you as far as those individual numbers go that are either green and red on your desktop, I like to take my students through a scenario, and this is the best way to explain something because, the name PitView implies that even though there is no centralized exchange or trading pit with live traders in the Forex market, this information is showing you the information that you would get if you were a live trader in the pit looking at the price action in the trading pit or the octagon in the Forex market. So I need to take you through kind of a scenario, and I want you to just really think in really basic terms about what we're doing in this scenario. Let's say that we are standing inside a trading pit where people are buying and selling, okay, and there's a market maker, aka a huge liquidity provider, that is one of the big players in the market. And you're brand new to the floor in this scenario, so what you're going to do is, instead of just going out and starting to trade, what you're going to do is, since you're standing right next to this market maker, this liquidity provider, since you know that they provide huge amounts of money to the market each day or transact huge amounts of money, you just want to observe your first hour on the floor. You just want to observe what this guy does. And if you walk through this with me, I think you'll really gain a deep understanding of what PitView is showing you. So as it says on here, you're standing next to a market maker in the trading pit for an hour trying to gauge whether he is bullish or bearish based on his buy and sell actions. So what you're going to do is you're going to have this little piece of paper, and every time that market maker raises their bid, you're going to mark it down, and every time they lower their ask, you're going to mark that down. And you're going to follow it and track every time they move their bid or ask price. You're going to follow and track that market maker for an hour every time they either raise their bid or lower their ask. So that hour, let's say you follow them for the hour, you mark every time they raise their bid or lower their ask to try to gauge in your own head whether they're bullish or bearish. And you see over the course of that 1 hour time frame, you see that that market maker that you're standing next to has changed their bid and ask price 30 times. They've either raised their bid or lowered their ask 30 times. Now on the next slide, I'm going to show you the details of what you've been tracking. We're going to go through the individual details because remember, at the end of this hour that you're spending standing next to and tracking this market maker, you're going to try to gauge whether he's bullish or bearish and trade off of that information. All right. So an imbalance example would be this. That market maker had 30 total actions at the bid or ask price. Now, when you look in your little booklet that you've been tracking everything, you see that that market maker raised their bid a total of 18 times, or 60% of the time in this case. So out of the 30 total actions, the market maker raised their bid 18 times. They lowered their ask, the amount that they're willing to sell, a total of 12 times, or 40% of the time. So you're looking at that and say, okay, they raised their bid 18 times, they lowered their ask 12 times. What side of the market does this market maker favor? What side of the market do they favor? Well, raise their bid 60%, they lower their ask 40%, so that creates a plus 20% imbalance. Out of all the times that they either raise their bid or lower their ask price, they raise their bid 20% more than they lower their ask. That's what the imbalance is showing you. So what this would show up with in PitView is what the green and red means now, because this would show up as a plus 20 in PitView, showing you that in the last hour, as far as looking at the totals, and we're not even talking about leading and following, just the total amount of time, this is going to show up in PitView as a plus 20 or a green plus 20, showing you that they raise their bid 20% more than they lower their ask. Now, if you were tracking this information and you saw that these were the exact market positions or transactions that the market maker was doing at the bid or ask price, would you consider that market maker to be bullish or bearish? Would you say that the market maker favored the buy side or the sell side of the equation in that regard? Good. You would obviously think that if you're tracking that market maker, you're trying to gauge for your own trading whether they're bullish or bearish, whether you should buy or sell on an underlying investment. And you would say that that guy over the last hour has obviously been bullish because he's been raising his bid far more than he's been lowering his ask. So he obviously favors the buy side of the market. So you got to think to yourself at that point, well, if this guy who runs a huge amount of liquidity through the market favors the buy side, what should I do? If I want to trade alongside this guy, if I want to trade with the big money on the floor, what should I do? Well, you're obviously going to favor the buy side of the equation too, if you want to trade along with the big money. So see, that's not so hard of a concept to understand. This would show up, it would say 1 hour T in your PitView screen, and it would show like a plus 20, showing you the total amount of times they've raised their bid or lowered their ask has been a plus 20 or favor the buy side of the equation. So again, it's not too hard to understand. It's just that when people first open up PitView and they see all these different numbers being disseminated across their screen, they often get they get paralyzed by all the information that's being disseminated to them, and they're not able to really understand what's occurring. So when we're looking at this overall, what I want to do right now is I want to take you live instead of going through this on a PowerPoint, if you will, let me go in and pull up PitView. And I'm gonna first start off by throwing up the pair view screen, if you will. There we go. And let me just, I'm gonna change this around to show you. There we go. And let me make sure I got, let's pull up dollar yen on here. We have a chart back here on dollar yen, and I also have pair view up. Now pair view is there's three different indicators. There's global view, group view, and pair view. And pair view shows you the most detailed total of what's happening with the market makers on each individual currency pair. And it's also probably the one indicator that causes the most confusion, because when you first open it up, it's obviously showing you so many different columns and so much information and so many green and red lights on here that you're just, a lot of people are just like, screw it. I don't even know what this thing is saying. Well, let's just walk through it together, okay? And then quite possibly we'll come to a better and more firm understanding of what's occurring on here. So let's just walk through each individual column. Let's start with LPID over here. Now there will be a lot of brokers and liquidity providers who would say that on the actual, here let me scroll down a little bit so we can see all the liquidity providers. There we go. That'll say that retail traders should not have access to this type of information because of the power of what it does for the retail trader. I think Retail traders should have access to any type of information that other traders, even professionals, have access to. So that's the way I spin it. So that's LPID right in here. What LPID is, in order for us to disseminate this information to you, the banks, the liquidity providers require anonymity. And so what we do is that instead of saying, and I don't know who these liquidity providers are because they do require anonymity, we assign each bank liquidity provider an ID. An LPID means Liquidity Provider ID, identification. So we're not just saying that, Barclays, or Bank of America, we're not able to do that because for obvious reasons, they require that anonymity in order to provide this information to you. So they're given an LPID, and those do not change. Once we assign a liquidity provider a specific ID, that is their ID. That's like their social security number, if you will. That will remain constant. So that a lot of people, when they get a little bit more astute or a little bit better at analyzing PitView, they will actually, they'll kind of become fans or groupies of individual liquidity providers. So LP23, LP34, these are just the IDs. Now the total percentage is showing you from most to least active of all the liquidity providers. Out of all the information, out of all the changes to the bid and ask price, as far as all the activity from session to session, they're showing you who has been the most and who has been the least active liquidity provider. So LP23 up here, you can see here where it says total percentage, where it says 38.89. What that's telling you is LP23, out of all the activity that's occurred at the bid and ask price, LP23 has controlled 38.8% of all the activity that's occurred at the bid and ask price since the opening of the New York session at 8 a.m. And then it will gradually take you down here and show you from who's been most active to who's been least active. So you can see LP23 and LP34 obviously have controlled a huge amount of the market action today. Down here, these are always going to be totals. Okay, these are always going to show you based on these percentages and based on the calculations between the percentage of activity and what they've actually done at the bid and ask price. It'll give you totals. Now, this will always add up to 100 down here because this is always going to show you based on 100% of the activity that's occurred in the market today. Here's what the total numbers are for each individual action the market makers have taken. So then we have 1 hour L. So what 1 hour L is saying is it's showing you the imbalance of each individual liquidity provider of what side of the market they've favored every time they've either led inside the bid and created a new bid price or led inside the ask and created a new ask price. So negative 26.83 means for the last hour, whenever LP23 has either created a new bid or created a new ask price, they have favored the ask price by a percentage of 26%. So they've favored more on the sell side of the equation. LP34 has obviously favored the buy side of the equation. So that's giving you the individual imbalance for every time they've either led inside the bid or led inside the ask for each individual liquidity provider. And down here, this will give you a total. This will give you a total down here of what their overall actions have been. So positive 5.82 means that out of 100% of the liquidity providers' actions that when they've led inside the bid and ask, it's favored the bid side or the buy side a total of 5.81% when you take into account 100% of the market maker activity. Following is, again, instead of when they've led or created a new bid or ask price, following is showing you the details of whenever they followed another liquidity provider. Whenever they've raised their bid or lowered their ask, however, they haven't created a new bid or ask, they've just followed another liquidity provider to the inside bid or the inside ask price. It is showing you the details of what the imbalances have been whenever they've followed inside the bid and ask. And again, right down here, these are the numbers that I tend to look at more often than not as the totals. Based on 100% of the market maker activity, whenever the market makers have followed inside the bid or inside the ask, they've favored the buy side by an imbalance of positive 8.36. And then right in here, this is a nifty little number, and this number right down in here. Now there's a lot of ways that different professional traders will look at the information being disseminated by PitView. A very basic way to look at it, the 1 hour T is an algorithmic formula based on the total amount of activity, the percentages, that breaks the percentages down to leaders versus followers to give you an overall sentiment or an overall total of where that market maker stands total for every action they've taken at the bid and ask price. So down here, this is probably the number that I'll look at more often than not, because this is telling you based on 100% of the market maker activity for the last hour, the activity has favored the bid or the buy side of the equation by a positive 7.46%. So they've, out of all 100% of the market maker activity, they've favored the buy side of the equation, either when they've led and when they've followed, by a positive 7.43. So that obviously favors the buy side. Now, when you go into these are called session columns. What I mean by that is because these are the columns that you typically can customize to go 1 hour, 2 hours, 3 hours, 4 hours. I call these also the hourly columns. 24 hours, 72 hours, however many hours you want to be totaled up in the PitView screen, you can do in these columns right up in here. Now, these are what we call the minute columns. This is where you can get more of a short-term view on what's happening in the market. So in this case, this is just like we went through on the PowerPoint, where you're tracking the market maker for all their actions for the last hour in the market. Over here, you can customize these for minutes. You can go to 1 minute, 5 minutes, 15 minutes. And this is saying, okay, for the last 30 minutes on the chart, whenever this is leaders, so this is showing for each individual liquidity provider their activities whenever they've led inside the bid or ask for the last 30 minutes. This is showing you the activity for when they've followed inside the bid and ask for the last 30 minutes. And this is showing you the activity, the total amount of activity for 100% liquidity provider when they've either led or followed inside the bid and ask. You can see it's a positive 19.12. So that's showing you that based on 100% of the market maker activity, they've favored the buy side of the equation by a positive 19.42. By 19.42% more for the last 30 minutes has favored the buy side versus the sell side. And that's where that imbalance comes from. And then it's green showing you that it does favor the bid. It does favor the buy. The interesting thing is you can customize all of these columns on your PitView screen. What I usually tell, for example, I have multiple methods in which I trade. I have some short-term methods where I trade off of a 5-minute chart. I have some swing trading methods where I might trade off of a 1-hour chart. I have some longer-term methods where I might trade off of a daily chart. Those are called trigger time frames. So if I'm looking at, you see that I have the dollar-yen pair in the background here, and that's what I call my trigger chart, because I'll look for opportunities to either buy or sell off a 1-hour time frame. For more information on that, you can come into my intermediate class on Mondays, and I go through some of the different strategies that I trade myself. So what I usually tell new people, even more experienced people in PitView, is I need some clarity when I'm trading off those 1-hour charts. I don't want to look at, 7,000 different columns because all it does is distract me and keeps me unfocused for what's happening in the market. So what I'll generally do, and again, this is based on personal preference, is if you right-click on this pair view screen and go to Show and Hide Columns, what I'll do is I'll uncheck the session leaders, I'll uncheck the session followers, and let's say I'm trading off a 1-hour chart, I'll uncheck all the 30-minute screens on here, and then go back over to my pair view screen. And if I'm trading off a 1-hour chart, and this makes sense when you think about it here, folks, is now all I'm doing is, I tend to look at the totals more, as there are some PitView traders that'll look at the leading column more so than the total column. If you're going to use one or the other between leaders and followers, you're probably going to use leaders because that's considered the more aggressive trading in the market. I like mine smoothed out more, so I generally look at the totals because I take both into account as far as being bullish and bearish. So I'll keep the total screen up quite often in my trading because I think that gives me more of just a smoothed out look at what the total market maker activity has been. So now I'm just looking at 100% of the market maker activity for just the last hour, showing me the total, where the totals stand between both leading and following for 100% of the activity. The beautiful thing about PitView is that you can see on here the dollar yen in the background, and here I'll zoom in even a little bit on it. You can see that it's coming down. It's been coming down the last several hours, becoming a bit bearish, if you will. You can also look at this as being kind of a, if you look at it from this standpoint, kind of being forming a bit of a little pennant formation in through here. When you connect the highs and the lows, this is kind of going a little off topic. Little pennant formation. You can see that even though the dollar yen has been making lower highs and lower lows, that PitView is saying that the activity favors the buy side of the market on the dollar yen pair for the last hour. So even though this is coming down and making lower highs and lower lows on this 1 hour chart, the way you might look at this as a trader, especially if you're wanting to trade along with the overall trend, one thing PitView can do very well for you is when the market is doing what we call retracing, because that's what this is doing. The dollar yen made a huge move up and now it's retracing down. PitView right here, when it's showing you a positive 10% that it still favors the buy side of the equation, is showing you that a lot of traders, when things start coming down and making lower highs and lower lows, they'll ask themselves a question: is this a trend or is this a retracement? Is this a trend or a retracement? In this case, I would say that this is a retracement, because all it's doing is it's coming down, but it's not really supported by the market maker activity. Market makers are still favoring the buy side of the equation. If you've ever heard of buying the dips, you know how a lot of big money in the market, in the stock market especially, when things are making higher highs and higher lows, because this is telling you right now really is that the dollar yen is really just coming up and making a higher low. Market makers still favor the buy side, and this is nothing more than a retracement, where you might be looking to buy off these levels and not sell, even though it is coming down lower. It's a great confirmation indicator in that regard. Anyway, I digress. On the pair view screen, again, this is showing you the totals on here. I don't want to get too far ahead of myself because this is the first week of our basics class. There's so much more that can be analyzed with PitView as you go through. If you want to change your time frames at all, let's say I want to change this from a 1 hour PitView to, let's say, a 4 hour. If I right click anywhere, you can customize, you can change your symbol, you can change what you're looking at. If I go to change time frames and sessions on here, if I want to look at the 4 hour total on here, let's say I don't want to look at it for the last hour, I want to look at it for the last 4 hours. Ignore all this for right now, and let's just go under session length over in here. This is your hourly totals. You can change this to 4, click on apply, and now we're looking at the last 4 hours. We're looking at what the market maker activity has been the last 4 hours. Whenever you raise your time frames on here and look at more data, remember in the long run, market makers want to be very close to 50%. So you'll see the imbalances shift and go down because it's taking more activity into account. So when this says a positive 1.6, it means that the market maker activity for the last 4 hours has still favored the buy side of the equation on the totals. You can see the last 4 hours it's gone down, which would actually confirm the fact that this is nothing more than a retracement. Market maker activity still favors the buy side of the equation, even though this has been making lower highs over the last 4 hours. It's very important when you're able to know that, because it gives you confidence in looking for buy opportunities when something is in the midst of a trend. So that's the pair view screen, and you can customize that. I'll generally tell traders, a lot of times I'll be looking at the totals down in here. Sometimes I won't even look at the market makers. I'll just keep this up on the top of my screen, floating on the top of my screen, which you can do if you right-click on this. You see how it says show this window as topmost? You can actually have this as a topmost window on your screen, and if you just wanted to look at the 4 hour totals or the 1 hour totals, you can put that anywhere on your screen so you can just track it as you're looking at your charts. So in order to understand the actual other indicators that PitView offers, which I'll go into more details next week, you need to understand the pair view, because the pair view kind of gives you that detailed information of what's happening at the bid and ask price. Now there's two other main indicators or main tools that we use here at PitView. One of them is called Global View. If I click on Global View, and these are things I'll be talking about in a little bit more detail next week. If the market makers are bullish, why is the price going down? That's a great question, Will. With market makers, okay, if the market makers are bullish, why is the price going down? This is why I explain to my students what's shown on PitView is not shown on your chart. What I mean by this is if you're looking at the last 4 hours, like I've been bullish on dollar yen, okay, I've been looking for buy opportunities on dollar yen. The dollar yen, when you look at it on a daily chart, it's been breaking into new highs and just screaming up, okay? This is a little Gartley pattern we traded it in my Tuesday and Thursday classes in my other class the other day, to where we got in on this little buy side of the equation. Now, with Will's question of if the market makers are bullish, why is the price going down? That's exactly the power of what this thing is showing you. You see, what is a trend? A trend is a series of higher highs and higher lows. Generally, when something is going up and it starts to come down and retrace, most traders ask themselves a question. They say, is price reversing? Is price going to turn over and start going down from here? Are we going to turn from an uptrend to a downtrend? That would be a reversal of trend, correct? However, when something is in the midst of a trend, when price does start coming down, remember, things don't go straight up. They make higher highs and higher lows, higher highs and higher lows, right? They don't just go straight up. So when things do start coming down, what you want as a trader is you want a little bit of confidence in the fact that, is this showing me, when this price is coming down on the dollar yen, if I'm looking to buy dollar yen, for example, if I'm looking to buy dollar yen as it makes a dip, hence when people say I want to buy dips in the midst of this trend, I want to buy into those higher lows. It helps if I have confirmation that this is not a reversal of trend, this is just a higher low being formed in the market. When you look at the PitView totals on dollar yen, why is it going down? Well, because the market makers may not be as active when it's coming down. They may gradually be liquidating and it's coming down. PitView is one of the only indicators that can act as a leading indicator. When this is coming down for the last 4 hours, it's showing you that the market makers still favor the buy side of the equation. The big money still favors the buy side of the equation on this. It's a different way to look at it, but if you understand it, it's where the power comes from in this. Because if this is coming down, it means, are the market makers really, are they into this downtrend? Are they liquidating dollar yen to where this is a start of a new downtrend on the dollar yen? No. They're still favoring the buy side of the equation, showing me that this is not a reversal of this overall trend. If I'm looking to buy dollar yen, all this is doing is confirming that this is just the dollar yen making a higher low. Because the market makers are still much more, their sentiment is still much more geared towards the buy side. So this is not a trend reversal. This isn't the dollar yen coming down and screaming down. This is the dollar yen just forming a higher low in the market. I go through this in some of my other classes by showing the difference between a trend and a retracement. Essentially just showing you, based on market maker activity, would you call this a new trend, or would you call this just a retracement of an uptrend? This is a perfect example of just a retracement of an uptrend of the way I would look at it on the 1 hour chart. Just a retracement. Market makers are certainly not engaged in reversing price action on the dollar yen as of right now. They still favor the buy side of the equation. Great question. Yeah, I know it can get confusing, but a lot of these things, PitView is such a different and such a powerful indicator and powerful tool that they always say there's no such thing as a leading indicator. Well, if you can track market maker activity, there is such a thing as a leading indicator, because you're able to track their sentiment. You're able to and do it real time, essentially. That was just a very long-winded explanation. I hope it made some lick of sense. On the global view over in here, the global view, this is a very powerful tool that we'll be talking about a little bit. Once you have global view up in here, I'll go ahead and pull up group view also, since we're right at the end here. Let me pull up global view and group view. These are also very, actually I can just double click on any one of these currency pairs and it would bring these up. There we go. So this is pair view down in here showing you the details. Global view, what it's doing is you see that it only shows one currency over here on the left-hand side. This is something that I just covered last week when I went through comparison analysis. What global view does is take all the buy and sell imbalance activity. You can see I have it set here at 4-hour T, so in the 4-hour totals. What this is doing is it's ranking the currencies from strongest to weakest based on not just how the Aussie has been trading against the dollar, but all the bid and ask activity for all of the Aussie pairs. So basically it's comparing Aussie to pound, New Zealand, euro, Canadian, Swiss, dollar, and yen, and showing you based on the buy and sell activity by the market makers versus all these other currencies, of which currencies are the strongest overall when you compare them to the other currency pairs when it comes to the actual buy and sell imbalances, and which one down to which ones are weakest overall. You'll see yen is right down here on the downside of the equation. And again here, even though we're looking at dollar yen on our screen, you see the dollar is right near the bottom of the list, but you see the yen is even worse off down in here. This means as far as which ones have given the best buy and sell activity on the bid and ask price, the Aussie has certainly had the most market maker action, the most buy and sell activity, the best bid activity, if you will, the most well-bid currency versus all the other currency pairs. It's here at the top at positive 2.51, signaling it's been very bullish. Yen has been very bearish down in here. It's at the bottom of the list, meaning it's been sold off. People favor more selling the yen. Is there an Aussie-yen pair? Yes, there is. If I double-click on any of these and I want to get a more specific, if I want to get a more specific view, if I double-click on the Aussie, for example, this pulls up what we call group view. You can see this total down here in group view, this 2.47 is the same thing being shown here on Aussie. You can see it places the Aussie on the base side of the equation so it can measure the bid and ask activity equally. You can see on the 4-hour totals, it's going to rank who is the Aussie strongest against and who is down to, strongest versus weakest, essentially. Since I know the Aussie is the most well-bid currency from the buy side of the equation, well, who's the Aussie being bid against the best here? You can see versus the euro, the Aussie is very strong against the euro. The Aussie is very strong against the dollar, very strong against the yen. New Zealand, the only one it's kind of got a negative one on is the Aussie Swiss. So what this is going to do is give you the pair details. Okay, I know Aussie is the strongest currency. What's the strongest, which currency is Aussie performing the best against? And you can see versus the euro. And if you double click on any of these, you can actually bring up, everything's just a double click away over here. You can bring up the actual euro-Aussie pair. And on here, you'll see that it disseminates the information the same way it's done on your chart. I'm getting a little ahead of myself here. You see how on MetaTrader, the euro-Aussie pair, the way it shows up, it's actually traded as euro-Aussie on here. And you can see pair view is showing a negative 4.51. Well, Aussie Euro shows 4.50 is green. Well, here the Aussie is the base currency because that's how they have to measure the bid and ask price. Here it's going to show you the way the pair is going to show up on your trading screen, which you can see this is making a large retracement to the downside here on Euro Aussie. So if you were a momentum trader, what this would be confirming is negative 4.60. If you short, this is the Euro-Aussie pair on a chart here. If you're shorting Euro-Aussie, this is just confirming that you're selling the Euro, buying the Aussie when you go short on this pair. This is confirming that momentum is, in fact, when you're looking at trading momentum, being along with the trend, trading along with it, that if you were looking for sell opportunities on the Euro-Aussie pair right now, you would be trading along with the market maker activity. So again, I'll go through more on how to analyze these three things next Wednesday in a follow-up to this basic class. The important information, and I know I just went on and on about some individual statistics here on the pairs. Remember what we covered today is all I wanted you to understand is what the numbers mean. Okay? When it says a negative 4.32 here under the 4-hour totals on Euro-Aussie pair, What does that negative mean? It means that the imbalance favors, on the Euro-Aussie, it favors the sell side of the equation, meaning selling Euro and buying Aussie. When you go short the Euro-Aussie pair, that's what you're doing. You're exchanging Euros and Aussie, so selling Euros and buying Aussie. So this is showing you, red shows you a sell imbalance. And again, this is confirmed on the chart here. It's going right along with momentum in this case. So just you knowing what these numbers mean. When it's green, it favors the buy side of the equation on the pair you're looking at. When it's red, it favors the sell side of the equation. And just knowing what those imbalance numbers mean is the whole point of what today's class is. And I'm like right on, perfect on time. Let me go ahead and bring my power. I'm going to X out of these real quick. We'll continue on with this because this will lead us next week into the three-step method of looking at global view, looking at group view, looking at pair view to get a better sense of how to analyze currency using what's called top-down analysis. And that'll be next Wednesday morning at the same time, same channel. Until then, if you do have any questions for me, you can email me at steve.nuri@pitview.com. This is an extremely powerful tool, folks. It's utilized all over the world by professional traders who are probably our biggest subscribers are probably professional traders in the Forex markets, because this is allowing people on the professional side of the equation to easily track market maker activity. This is just a new type of indicator to a lot of you. It's not a difficult thing to understand. It's just different. Remember to embrace the simplicity. If you have not subscribed to PitView yet, you can go to pitview.com/web to either subscribe to PitView, or you could to start a free trial if you want to try it out. We do give away 2-week trials of PitView on this website. Until then, I always have fun coming in here, so just let me know if you do have any questions, and I will chat at all of you next week, and I will see you later. Until then, this is Steve Nuri signing off. Thanks for coming in. Bye-bye, everybody.